Guys, here's a quick update again this Sunday for Bitcoin and Ethereum, but we're also going to take a look at XRP because after this pump, a correction is usually expected. Personally, I'm more inclined towards short positions, or rather I'd be very happy if I could open new long positions down here, as well as manage my current positions that I have open. I have some open positions in Ethereum. Those are currently about $10,000 in profit though, $7,500 realized, $3,500 still open, and nearly $3,000 in profit on Bitcoin. I would scale these if we see a stronger correction. Does this correction have to happen? No, at the moment I would really say sit tight because it can be very, very risky. If you're short now, it's not out of the question that the price just keeps pumping. If you're long now, it's also not out of the question that we keep falling further. That's why it's a rather difficult situation right now. Why do I want to point this out to you? We're also looking at the liquidation heat maps. Here we see $120,000. I want to show you something else using the Fibonacci extension level, that this could be a price target. Not only that, but the last 3 days. If we take a look at this later in the liquidation map, when we switch to the one-day view, we see that above and below we have a very balanced amount, about $500 million in liquidations on each side. That means if it doesn't happen today, then I tend to think that just like here, both longs and shorts will be liquidated, and that will happen in a very short time once the exchanges open. But what do I want to show you today, and why am I saying it's better to hold off for now? If you already have long positions, that's fine, but opening a new long now to catch the pump is a bit tricky unless we have a confirmed breakout. The same goes for a short position. And why do I say that? Normally you would short to trigger liquidations below us. But if we look back at the past and see what happens when Bitcoin takes off, no matter which coins, but let's use Bitcoin as the example. From this low, from this double bottom here, we had an increase, a small consolidation, and from that consolidation the next upward move. And if we look at this here, we see that we went up 5%, consolidated a bit, and then actually rose by almost 13%. And normally people say, hey, we have so many long liquidations lying below us down here, they should be triggered briefly so that we can then continue to rise afterwards. So what happened here? Absolutely nothing. We formed a divergence on the 4-hour chart. You can see here it also took a bit longer until it played out again into this support line. The RSI was able to calm down in this case. And what happened then? We kept pumping. Bitcoin then made another pump here of almost 12%. And what would normally be expected? That we say, hey, we have so many liquidations lying around that have pushed the market further up. We should have a correction to pick those up. That didn't happen in this case either. Then Bitcoin consolidated again, did exactly the same thing. Again, there was a divergence here, rising price, falling RSI. One last correction in this case, yes, down to the support line. And what did it do afterwards? It pumped further again. And if we look at it, that was again around 10%. Only then did Bitcoin start to pick up the liquidations, at least from these areas. But what I'm specifically interested in now are these areas that we see here. Bitcoin took off, consolidated, pumped, and we could see something similar here now as well. It really doesn't have to be the case that we go straight down. Of course, I want to be ready when the time comes, but for me to say now that I'm going long or short in this price range without confirmation, without saying, hey, we're seeing some kind of price action here, a lower low, so that I can enter a short here, I actually wouldn't do anything at the moment, okay? Sometimes it's better to stay on the sidelines than to risk too much here. Because even if we look at the 1-hour chart now, we're not doing anything other than consolidating here. And in fact, we're actually forming a bullish pattern here. And this bullish pattern would typically mean a breakout to the upside. Despite all that, of course, it could still be a fake out. But what I want to show you now, which is much more exciting, is why the $120,000 are currently very interesting, at least in the short term. If we now, yes, bring in the Fibonacci, and by Fibonacci level, I mean the extension, that is, we take the last low, high to this last low, so that we can see it as an extension, we see that we had the first reaction at the 1.272 Fibonacci. And that was where the first reaction happened. After we closed above it, we briefly collected some liquidity again. And now the next one is at 1.618, a very, very valid extension Fibonacci at $120,500, and that would fit exactly into this price range here. Maybe we'll go a bit higher, but for me that would be a price target where I'd say, hey, we could still go up there and maybe afterwards we'll correct down a bit again. We'll see about that. At the moment, no one can predict it, and no one is saying that we might even see a consolidation here, because right now everyone is either extremely bullish or extremely bearish, saying, hey, we have to go down again. But no one is saying that we might actually have a strong consolidation here and build up a lot of liquidity. where the market makers can position themselves in order to then start the next move either up or down. Because purely from the RSI perspective, a bit of a cooldown wouldn't be bad, so that we can recharge a bit and then have the strength to pump further up. That's how I would see Bitcoin right now, because if we look at Bitcoin on the 3-day chart, we have a lot of liquidity both above and below us. The higher we go, and I'll show you this again in a higher time frame on the liquidation heat map, we see that there are some small clusters with a bit of liquidity, but in fact, the next real cluster isn't until 170,000 US dollars. And if we look at that, there is already a bit of something there at the moment. It stands out compared to everything else, but overall, we can't say that there's a single cluster with a billion or anything like that, making it immediately interesting for us to pump down to that level. And don't forget what I showed you earlier. We also had strong clusters below us here. After this consolidation, we had strong clusters below us from all the people who went long here. And it was the same here, that we had strong clusters and yet the price was pumped upwards. Yes. And then those lower clusters were actually never revisited. And you should keep that in mind, that can happen. So you shouldn't be too bearish, but maybe not too bullish at the current moment either. If we take a look at Ethereum, Ethereum is also very interesting right now. The only coin where I still have a short positioner, actually two short positions is here at 0.618 and at 0.65. My stop loss is set a bit above my key level here. But why do I have this here? I think I already mentioned this in the last video. If not, then I said it live. Then here we have the overall correction level. Yes, that's what we have here. After this pump, the 0.618 could be the level from the last high at a little over 4,000 US dollars, where we get a correction here and maybe still drop back to the 0.5 level or even a bit lower. Because with Ethereum, even on the 3-day chart, we see that 2,800 and 3,052 are liquidation zones that are very interesting. And if we look at the weekly chart, for example, we see that although a lot has been accumulated overall at the bottom, the real clusters are very close together. Now let's take a quick look at the 1-month chart on the liquidation heat map. This is also very interesting because there isn't much above or below us except for the price range around 2,300 US dollars. And I think that's something nobody wants to see. But there's an incredible amount here, and never say never, so it's not impossible for us to go down there. But that would be a target zone for me, provided that the longs don't close their positions early if the price starts to fall. I actually didn't show that earlier with Bitcoin. On the 1-month and 3-month charts, you can see that the strong liquidation clusters below and above us are no longer glowing as brightly as we might be used to. Of course, there's still quite a bit at $105,000 and $130,000. Whether we'll actually get there is, of course, questionable. If you look at the 3-month chart, it's not like we have a brightly glowing cluster that really tells us we have to go down here. Because especially on higher time frames, clusters like the ones we've seen here would be interesting to target. Below us at the moment, there's nothing in sight. This means that overall, we actually have a very bullish momentum in the long term because there's not much below us that would be super interesting for the market makers to push prices much lower again. And you can see that now as well when I switch to the daily chart here. As I mentioned earlier, it's likely that tomorrow, maybe even today, something will happen here, but at the latest by tomorrow's market opening, we'll see up and down movements to pick up what's attracting attention elsewhere, yes. On the liquidation map, we currently have only 1.5 billion in liquidations above us, so these are very highly leveraged short positions. You can see this by the fact that this curve flattens out very quickly here and that most of the buildup actually occurs up to around 120,000 US dollars, after which the curve continues only very slowly. And here with short liquidations, we actually have an accumulation of almost 3.6 billion coming together up to a price range of around 170,000, a little below that, US dollars per Bitcoin. Of course, that could be interesting, but 170,000 US dollars is in this case the price range where we would actually fall below our last all-time high again. Will it happen that way? We'll see. We must not forget, this liquidation zone shown here on the liquidation map is of course not fixed. As soon as we move down, these positions can be closed again, and then it's no longer interesting for the market makers to push the price further down. XRP is super interesting. If we look here on a weekly basis, we can see that at the current time, the interesting levels are around $2.80 to 90, and below that, $2.20, where there's something again, as well as $2.60. Apart from that, it's also the case here that at the moment we have much more below us than above us. But also with XLP, if we take another look at the chart, it looks really exciting. We also had a huge pump here. XLP really surged massively and is now currently consolidating. It would of course be ideal if this consolidation here is actually still an accumulation phase for the next price pump, so that we really enter a parabolic market and reach my price targets of around $5 for XLP. But we must not forget, XLP, yes, has only made consolidations from this low here, just like Bitcoin did back then on the same time frame, but after the last pumps, there were always dumps that picked up liquidity below again. Next pump, what happened? Again, it consolidated for a while, and again, some liquidity was picked up. And we've actually seen this pattern regularly with the pumps of XLP. That means in this case, it would really be interesting if we could actually maintain this pump for once. Maybe this is already the start of the altcoin season, so we can say, hey, this exact consolidation is good for us right now. Here too, at this point in time, it's actually more of a bullish counterpart that we are forming, which could be very, very exciting. You can see this a bit more clearly on the 1 hour chart. We could then develop this further so that we continue to consolidate here and then actually break out to the upside. But be careful right now with opening new positions, whether you're going long or short. If you're not actually watching the chart live and see a breakout with strong volume, meaning a breakout from a pattern or from these recent highs here, I wouldn't specifically go long right now, but at the moment, I also wouldn't really go short. Because as you can see, and I haven't shown you this yet, we've recently had more than $1 billion flow back into ETFs twice, once 1.5 billion, and here it was 1.23 billion that went back into the ETFs. We haven't seen that for a very, very long time. That of course indicates very bullish momentum, especially among institutional investors. Alright, that's actually it for now. Don't forget to leave a like on the video and subscribe to my channel. And don't forget, I'll be going live again today. I estimate it'll be around 7 to 8 o'clock. I'll let you know the exact time in the Telegram group. The link is in the video description, where we go through new grid trading bots. We'll take a look at the results from the first grid trading bots I set up on Friday. And once again, there's a chance to win $100 in this live stream. Exactly. Otherwise, see you next time. Bye bye!